garage sale and all that. And I actually referred someone, because he's got Novato, I guess, particular specialist, referred somebody to Novato. Anyway, nice enough guy. So now I'm on his email distribution list. But he sends out a newsletter this morning. The newsletter is all about nationwide statistics. And I just wanted to kind of bring that up. It's like, you know, nationwide homes are growing at 5.8% last month, and nationwide, you know, everything looks rosy, but, you know, we're in California where, quite frankly, we've had a 10-year run of really, really, really good news. And I guess more of a comment, I just thought, you know, cautioning people to be wary of all of this great nationwide real estate news, because we've already, you know, we're very long in the tooth in California, and we should all be, you know, kind of thinking about, you know, where we are in the real estate cycle. Not that there's never a good time to buy real estate. If you're buying your home, you know, there's never a bad time, and now would be a great time to buy a home. But, you know, I'm not a fan of national real estate statistics.
Nope.
I just don't think they're. So that's why. So I wanted to start off with that, and I just figured, you know, have you just jump right into it.
Are you okay with where the mic is?
Yeah. Thank you. I can get in there.
All
right.
We all like spread out.
Spread out.
What are the times that? Oh, I'm sorry. 6:10, 8.
Oh, 10.
I usually keep a pen there.
You do? Someone stole it. Bert was here this morning.
Yeah, Bruce Baker, Steve Baker stole it.
6:10. 10 stealer. 6:10.
8:28, 8:10, 9:17, and 5:10. Hi. Okay, thank you.
Yes.
Oh, it's
All right.
All right, here we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hanf of Pacific Private Money, Patti Cohn of Pacific Union International, and joining us once again, Nam Phan of Pacific Private Money. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack Tanny certificate given away during the show. That certificate's not sponsored by the radio station, but by Tan Tanning Salon, with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is general trivia. Mark, you got something you want to tell us?
Yeah, so I get, like everyone, lots and lots of Stanny and other types of newsletters in my email inbox. And a local realtor in Marin that I was just talking to Patti before the show, and she knows this person. And he sends me a newsletter, nice enough guy, but the newsletter he sends starts talking about national real estate statistics. It was very bullish real estate newsletter about how great the real estate market is. Nationwide prices are up 5.8%, and the lack of inventory is going to continue to drive housing prices further north, et cetera, et cetera, et cetera. And I just, you know, I'm not a fan of national real estate statistics. You know, everyone who is a real estate investor that I've ever known, who's a successful real estate investor, says that real estate is local. It's all local. And, you know, here we are, you know, nearly, gosh, when did we see the market start to turn around here in California? Much earlier than most other states in the U.S. And maybe 2012, maybe.
Yeah.
We're a good, you know, we're a good 6 years into the real estate recovery. And in fact, in California here, we're wondering how much longer this could go. So I just find it interesting that nationwide we're all going, oh, wow, happy days are here again in real estate. Isn't this great? In California, we're going, well, it's been great for 6 years. How much longer? So Patti, what do you think about national real estate statistics?
It's irrelevant, not even worth talking about. The truth is, I'm seeing right now, being in the trenches, a shift in how buyers are behaving. And it feels a little bit like the end of the seller's market.
Really?
It really does.
We've all been looking for those signs.
Yeah.
I was just saying, this is the first time I've heard you say that.
I know.
Yeah.
And it's only January, but I mean, in January, I took 6 listings and I had 7 sales. So I'm like in the trenches.
So you sold the same listing twice?
No, buyers, sellers, leftovers from last year. Yeah, exactly. And I actually did. I don't even count that. Here's
Okay.
funny you brought that up, because on one of the listings, it fell apart. Buyer walked. We were shocked at the price he offered. It was ridiculously high. But then when he came down to reality, it came in ridiculously low. Sellers were squeezed and had to close. So another one fell apart twice. We had 11 disclosure packets out and one offer that was low. So it's weird what's happening. It's very frothy, but you know, net in the Bay Area, the price appreciation last year was 13.8% for the Bay Area. And that was not predicted. And then the number of sales were down 12%. And that's only because of lack of inventory.
Yeah.
So what happens at the end of the market, what, you know, the pigs get slaughtered sort of thing?
Yeah.
Another signal is when sellers come out and they go, okay, now it's time. I'm going to ask that really high price.
Yes.
You know, and then buyers sort of get these schizophrenic messages about like, oh, you know, this one went with 5 offers, this one's been sitting there 60 days, maybe the market's changed. And so that's what I've seen. And it's really hard to tell. We're going to have a good spring, but what is going after that? So, you know, what is it, the second longest period of economic recovery ever?
Yeah.
And, you know, 6 years of rapid appreciation in the Bay Area. So what is going to happen next? I mean, I honestly have been thinking that for a couple of years, but, you know, is it too early to tell? I'm not sure.
So would you think that in California, we're likely to see the change in the market before anywhere else in the country?
Yeah, we tend to. Yeah, we tend to do that.
Yeah.
And Silicon Valley actually is hurting right now. So that's kind of the heartbeat. It used to be San Francisco was the heartbeat, and the trend would go north to like Marin, Sonoma. But Silicon Valley, I have.
When you say hurting in terms of inventory,
it posted the largest sales decline
Interesting.
in the Bay Area, but that was number of sales.
Yeah, because my son is just going to be probably moving back to the Bay Area from Orange County because he's going to probably get a job up here. So interesting to see in the South Bay, you know, what's available for him. They'll probably rent to begin with. But.
Yeah, well, over 3 million is the part that's suffering the most, and the biggest, you know, every buyer is $1 million, and
he can't afford 3 million.
Yeah, no.
And Daddy ain't going to gift it to him either.
Right.
Okay.
And so that means he's going to be competing,
Gotcha.
even though the market's changing.
Gotcha. Okay. Tell you what, first commercial break. We're talking general trivia here. What board game was invented by Charles Darrow during the Great Depression? Okay, what board game was invented by Charles Darrow during the Great Depression? Not Darwin, but Darrow. he'd be dead by then. Okay, that's our trivia question. Call 888-912-1190 to answer that trivia question. If you're the first caller with the correct answer, you're going to win that tanning certificate. Don't touch that, which is worth about $100, by the way, or $150. Something along those lines. Don't touch that dial. The best of investing. We'll be right back.
Wait, isn't it
Yes.
Yes.
Monopoly.
Monopoly.
Yeah.
Monopoly.
real estate monopoly depression? That kind of, yeah.
I have a question for you.
Yeah.
Out of the break,
Oh.
so.
Oh, I thought you were serious. Okay.
Yes,
sure.
surprise.
It's a serious question.
Okay, good. What is it gonna be?
This is gonna be, this time last year, it was raining hard. It's gonna rain for a while. I don't expect it to be like that this year, just the way it's been.
Yeah.
So if I'm a seller, should I go ahead and list now or?
List now.
Okay, so that's the
List now.
question.
And honestly, even if it's raining, list now.
Okay.
Because what happens is I've looked at supply and demand curves and seasonality following the graph month by month for like 15 years.
Mhm.
And February is the best time because it's the least, the more buyers and least inventory.
That's a
because-
great data point to share.
Yeah.
On the show.
Yeah.
That's awesome.
I've said it a lot of times, so it's not gonna feel like a broken record, but nobody really listens. So
You have to tell them 20 times.
I know. But yeah, February's the best time because it makes no sense, but people go, well, I look prettier in the spring with my flowers and all that.
Sure.
Well, everybody does.
Right.
And if you're in February, nobody has flowers. It's all rain, so it's a level playing field.
Mm-hmm.
And the buyers come out before the sellers, so they are ready to go, and they're like deer in a headlight. They want to find something. They're like starting the game. They're ready to pounce.
You're competing against us too, right? Inventory as a sellers.
Right.
So you brought some stuff then?
Pretty much like just what's going on in the market
Yeah.
stuff.
Do you want to ask your question?
Yeah, it's to have a question.
All right. Are we ready? Let's do this. Welcome back to the best of investing. Again, I'm Edward Brown, your host, along with Mark Hahn, Patti Cohn, non-fun. All right. First trivia question. What board game was invented by Charles Darrow during the Great Depression?
Monopoly?
Monopoly. He was bored, so he invented a board game. That's correct. Yeah,
That's where it came from, right?
yeah, I think that's. Well, I think the idea was it was so depressing that people could feel like they were, making money.
Somebody should make Oligopoly as a new board game,
Mm.
where all the corporations own everything.
Yeah, that's true. That's a good idea. Hey, want to make a quick mention here. March 17th at the Marin Center is the Transcendence Theater's Broadway, Women of Broadway. And if you've never seen their show before, they do a fantastic job. So go to womenofbroadway.com, the Transcendence Theater at the Marin Center
Sounds
Theater.
great.
It's really, really awesome. Mark, Nam, you want to ask Patty a question?
Yeah, Patty, so this time last year, we had so much rain, for the next
Yeah.
few months going forward. And so that people, there were less homes being put on the market just because of that. This year, completely different story. It's like 70 degrees today.
Yeah.
And imagine it's probably going to be like that. Maybe some rain, but I don't think it's going to be like that for the rest of this spring. So as a seller, should I consider putting my home on the market now, or would it be worthwhile to maybe wait till quote spring
Yeah.
season?
That's a really good question. And I was just with a group of realtors and we were talking about that. And the conventional wisdom is wait until spring. And old school sellers still feel that way. But in the last, I'd say 3, 4, 5 years, it's kind of shifted anyway. But I've been saying for the last 20 years, February is the best time to list your house because the buyers come out in February and they're really like fresh and out of the gate and they're ready to find something
Right after Super Bowl?
right after. Well, maybe that's a conventional wisdom also. But how about if everybody's like maybe I'm contrarian. If everybody's flocking over there,
Yeah.
why don't you do it before they go over? Because the buyers are out and the sellers aren't yet.
Good point.
So seller, would you rather compete with everybody else? Is that what you're saying? And the thing is, like, it's a level playing field. So even if it was raining, everybody's going to be everybody on the market is going to be in the rain, and everybody's going to have the same flowers in spring.
Mhm.
Good point. All right. Let's see. Hey, Mark, we received a couple of emails for you. Actually, I've got 3 different ones here. First of all, what effect does the wild stock market ride have on your lending business and the fund?
So the stock market, when the stock market is wild, it's actually really good for alternative investments. And at Pacific Private Money Fund, at Pacific Private Money, we have a fund that we use to make mortgage loans. We're an alternative finance provider. We make short-term loans to people who need to close a real estate transaction quickly. And it's interesting, we've had more inquiries in the last several weeks about our fund because of the volatility in the stock market. People don't like volatility. People don't like the unknown. And yes, the market goes down 1,000 and it goes back up 500. Many are wondering, hey, it's been a great ride this last year in the market. Hopefully, those of you listening, you've had some exposure in the market, so you've been able to enjoy that ride. But maybe now you're wondering if you put, if you're a little overloaded or overweighted in your portfolio in stocks, you might be thinking that it's time to, reposition. And if you are, you wouldn't be alone. So we're seeing an influx of dollars being invested by our existing investors into our fund, and they're taking it from profits. They're taking profits from the market and increasing their accounts at Pacific Private Money Fund. So we're pretty thrilled with that. It's interesting. We think the real estate mortgage pool fund model as an investment does well when the market is going up, but it also provides safety and security features when the market is going down. So, we think, I wouldn't say that we're recession proof, because certainly, the last real estate recession is proof that there is no industry that's recession proof. But that being said, knowing what we know now as a result of the last cycle, we are preparing our portfolio to be able to withstand, a relatively significant downward trend in pricing. And just like we were talking about in the last segment, you know, in California, we're probably going to hit the market cycle, the real estate cycle before anybody else. And you know, maybe some of those signs are going to be forthcoming this year. So give us a call for more information at Pacific Private Money. We're at 415-883-2150, or go to our website. Website's pacificprivatemoney.com. That's pacificprivatemoney.com.
Very good. All right. No, let's see. No, Nam, you already asked Patty a question. So let me ask Mark one more quick one here. You've stated in the past that you typically will lend no higher than 70% LTV, but I hear and see bank ads that claim that they'll lend up to 90%. I thought they were more conservative.
So banks have never been more conservative than private money when it comes to loan to value ratios. People think when they hear the term hard money or private money that it's, you know, up to 100, you know, it's high percentage financing or up to 100%, or you could borrow all of the equity in your home from a hard money lender. That's actually never been the case. When I worked in development before I was a lender, and we used to borrow from several local hard money lenders. Even then, it was 65 to 70% maximum loan to value was what we could borrow against existing equity. That differential, the difference between 70, let's say 70% and 100% is 30%. That 30% is called protective equity. That's what is left over in case the borrower stops paying and the lender has to foreclose, and maybe there's some, you know, 6 months of unpaid interest, et cetera, maybe some unpaid property taxes when you foreclose, or there's costs, legal costs, foreclosure costs. So we need that protective equity so that if things don't go as planned and we have to foreclose on the property, that our investors who've you know, placed their capital with us in exchange for a promise of a high yield, we don't want their principal, their capital, to be at risk. Now, the banks take a different approach. They have a different charter. They're not using private capital. They're using money from, you know, basically borrowed from the feds to make loans. And really, their whole lending model is different. They're in the business to make long-term loans, and over the long term, real estate values go up. So they can make an 80% or 90% loan today because on that 30-year loan they're giving you, they expect the value of that home over time to increase in price. At Pacific Private Money and other private money lenders, we lend on today's value mostly. Some lenders lend on future value if it's a fix and flip, but most of our loans are not to flippers. Most of our loans are to people who need the money now and are going to pay us back in 12 months. So we solve for today's value, and we solve for 70% loan to value or less.
Very good. All right, we're going to go to our second commercial break. What do you get when you mix white rum, lime juice, mint, and sugar? Call 888-912-1190. What do you get when you mix white rum, lime juice, mint, and sugar? Don't touch that down. The best way to invest. We'll be right back.
Mojito.
Breakfast.
Very good.
Breakfast.
Breakfast.
Exactly.
No, that's a good way to answer.
There's fruit in there.
What was happening is, are we moving around the wires too much? Is that why?
Yeah, I don't know why it's doing that. And the stupid
I'm
computer.
not touching wires. Am I touching wires?
I just like the place blank.
I know, me too.
Yeah.
Yeah. I thought it was him. I saw him touch those wires.
Yeah,
No.
I kept
Put your
hearing it.
magnet up to the wires there.
Exactly.
These guys. Yeah, slow, not because of financial volatility, but lack of supply. Yeah. Yeah, Core Logic, I saw that December report, 14% for the Bay Area. That's just.
It's good. We get 2 segments already. I'm
Yeah.
gonna go sit this.
Because back to the office.
What are we talking about on the next one? Do you have a question for Nam? Or,
We can do a deal of the week, then we can expand on that.
Yeah, let's go do the week.
okay.
I think that the computers nowadays, I think they have the.
I can't come on, push this thing at the same time. Yep.
Welcome back to the Best of Investing. Edward Brown here, along with Mark Vaughn, Patti Cohn, and Mount Vaughn. Second trivia question: what do you get when you mix white rum, lime juice, mint, and sugar? No.
Breakfast.
Breakfast. No, that's not
Oh,
true.
man, foiled.
Well, yeah. Patty, what's the answer?
Mojito.
A mojito. That is
Summer drink.
correct. Very good.
Feels like
Well, a quick mention here also for the San Francisco Theological Seminary. Thinking of a wedding venue, family reunion, or a place for you and some friends? Check out the San Francisco Theological Seminary in San Anselmo, where a gracious 2-story, completely remodeled Victorian home features 6 spacious bedrooms and 3 full baths, kitchen, and all that fun stuff. Call 415-451-2836 or go to www.seminaryevents.com. Mark Ornon, do you have a deal of the week?
Yeah, I've got a deal of the week that this loan that closed a couple of weeks ago. This is in Oxnard, California, where we provided a loan to a brother who's a contractor. He saw property that he liked with a detached unit. He just needed speed, or the capital for speed, so we gave him a loan for $420,000. He's going to fix it up and rent it out. But it's a pretty typical deal for us. But one of the things I wanted to highlight about this is this credit score is in the mid 700s.
Okay.
And this is a loan we're going to sell on privatemoneyloans.com shortly. There's another loan that we're going to put on there as well. The borrower in that case, their FICO was in the 800s. So just want to reiterate, people think hard money. They think the borrower is typically somebody who's not in a great financial situation. That's often not the case these days. A lot of people come to us for speed.
Right, and so a typical question we get from an investor who, we talk about our fund that pays 8%. Well, how do you produce that? Well, we make 9 and 10% loans to the public, and they go, why would anybody borrow money at 10% when bank rates are 5? They're just, and it's typical. And the only people that ask that are ones obviously that haven't tried to get a bank loan in a while. They probably got their 30-year loan, when markets, when the mortgage rates bottomed out sometime, how many X number of years ago,
Right.
But or they have steady income, and again, they're just there's that group of lenders, and it's actually probably a majority. I don't know what the percentage is, but a majority of borrowers have fixed, reliable W-2 income, and they're not borrowing more than their means. They have the income. They can check off all the boxes. They got the savings account, they got the cash in the bank, they got the W-2, they got the job that they've been at for X number of years. But here in the Bay Area, we've got this, this industry where people move around a lot, right?
Yeah.
Between tech jobs. So it's actually rare for a person to be at the same position more than 2 years. I shouldn't say rare, but there's a significant percentage of borrowers who are moving around from job to job, because they're in high demand. Workers are in high demand, and there's no loyalty anymore among a lot of, especially in tech companies. You got that, and then you've got the high percentage, relatively speaking, in the Bay Area of self-employed, which is not true throughout most of the rest of the United States. So in the Bay Area, we have a higher than normal percentage of people who just can't check off the boxes for a conventional bank loan, especially when they're competing in a tight market to buy. So those guys need 90 to 120 days to get a conventional loan because it takes longer to provide the bank with this endless stream of information that and explanations and, oh, wait a minute, you haven't seasoned that money long enough and you got to stop moving money between bank accounts, and which a lot of our contractor clients do. So there's just a myriad of reasons why in the Bay Area there's a higher percentage of the population that really just getting bank financing can be one of the most humiliating and frustrating, if not downright angering processes. And you need, and if you're competing in a tight marketplace, you're not going to be able to get that house you want. So what do? You come to an alternative finance provider like Pacific Private Money. And yeah, our money is, nearly twice as expensive as the bank. But the good news is that we actually make it really easy to borrow that money. First of all, it's light documentation, and there's no prepayment penalty. So we're a tool to help people capture real estate quickly and reliably. They can make an aggressive offer that closes in, let's say, 21 days, maybe even more aggressive than that. We've helped people close 14-day transactions. They'll put in an all-cash offer and then come in with a no-frills private money loan from a company like us.
Well, even though you've mentioned that your rate is almost twice as high as a bank. Since there's no prepayment penalty, they can pay you off quickly, and so that it doesn't hurt.
Right,
Much,
it's a tool. So here's what ends up happening is that people use us for certainty of ability to buy real estate. And what it costs them is anywhere from $10,000 to $20,000 more to buy the house they want. Now we've taken away the worry and the what ifs. What if the bank doesn't close in time? I'm going to lose my deposit. I don't want to lose $50,000. So there's a lot of things, and we've rescued transactions where we get calls. I've gotten emails over the weekend from realtors saying, "Hey, I've got a client whose deposit is already non-refundable, and I'm going to lose it if I can't close this deal on Friday, and the bank financing just fell through. Can you guys help?" And we love stories like that. We love helping. We love rescuing deals. Contrary to hard money lenders of 20 years ago, we're really heroes for many people. We're doing good work. We're making loans that people want, need, and appreciate. We're not lending to people, we're not the lender of last resort for people with one foot in bankruptcy, and the only way we're going to get paid back is if everything goes perfect, which means we're going to probably foreclose on their property. That's not the kind of loans we make anymore. We're a plan B when plan A is not a reliable option.
And banks are not really up with the times either. I met with a mortgage broker today, and she talked about a client who had excellent credit, had income from stocks, but for some technicality that income couldn't be used in calculating.
Yeah.
$2 million in the bank.
Oh.
And they wouldn't give him a loan. There was one other technicality, and I didn't really pay that much attention, but I thought, just pure logic, and a fifth grader would say, give that guy a loan. And he couldn't do it. And she's going for an exception, maybe she'll get one. But back to, it takes a lot of time, and you have all this red tape, and people don't want to do that anymore, or can't, and don't want to lose their deposit or whatever.
Right. So we help them get in the house. Now they're in. You're living there. You've got your dream house, and you can take now the next, 2, 3, 4, 5, however many months it takes for your mortgage broker to get you that conventional financing, get you that 4% loan, and then it's all well and good. You got the house you wanted. So yeah, it's funny because we're able to take a holistic approach and say, what's the likelihood this guy is going to be able to get a conventional loan and pay us back? And usually that certainty comes from the mortgage broker who brought us the deal,
Right.
who brought us the client.
Yeah.
And so, again, we help realtors and we help mortgage brokers look like heroes to their client by, rescuing transactions.
Very good. Hey, tell you what, we're going to go to a third trivia question here. What is the only pasta to eat for good luck on New Year's Day, according to Sicilian tradition? Call 888-912-1190 to see if you know the answer to that question. Don't miss that dial. The best of investing. It's going to be right back. It's a weird one, huh?
Yeah. I said it's sort of that arboretum, not like a rice, but I can't remember. It's a good one. I don't know. Yeah.
What's that?
I like pasta. Can't eat it.
You don't love me. Yeah.
Yeah, don't let me. I can't remember.
There was
Hey, what else can we yak about?
Hmm.
So we kind of talked about, we kind of mentioned these two things.
there is one other one that Nom had brought up about what you did prior to 2013 because of just reading on the website about being in business since 2008. I can read that to you.
This is what? Oh.
It was a more of a question.
Was it a real
Oh,
question?
okay.
From
Yeah.
I made one up.
You did not.
Oops. It's like a secret I'm not supposed to share.
I thought everybody
Email
knew
these
that.
questions.
Yeah, I know.
Live YouTube.
Oh, oops.
Yeah, I don't know what he's talking about.
I'm far enough away from
That's true. Yeah, it's kind of strange how at least the mics are picking up well. The ear thing could be good, but that's not what's being picked
Oh,
up there.
well, that's
Yeah.
good. Okay.
Yeah, mine was going all over the place.
All right.
So what else? How much time do we have left?
We have a 9:17 and then a 5-minute one.
Okay.
Yeah, let's.
So answer this one. And then,
it. May I ask you a staging question, maybe? Like should people
Staging,
stage?
right. Yeah.
You want to get into that first one?
Yeah,
Let you get to that. Okay, here we go. Welcome back to the best of investing. One more time, I'm Edward Brown, your host, along with Mark Hanf and Nam Vaughn of Pacific Private Money and Patti Cohn of Pacific Union International. We're going to ask our third trivia question here. What is the only pasta to eat for good luck on New Year's Day according to Sicilian tradition?
Gnocchi?
Yeah, not gnocchi.
Angel hair?
Nope. Oh, good one. Lasagna.
Oh,
Lasagna. Okay. So, Nam, you want to ask Patty a quick question about
Yeah,
staging?
I have a couple friends who are stagers, so they're probably not the person to ask. But is staging really effective for when you're putting your home on the market to hire a stager to do all the work? It seems like it's a lot of work and
It's a lot of money.
expensive, too.
it's a lot of money and it's a lot of work, and it absolutely positively does work.
Yeah.
And especially here, when pretty much everybody does it. And other parts of the country don't as much. But if you're the only game in town doing it, you're going to look even better.
Hey, you
So
want to
no
put your
matter
best foot
what.
forward, right?
Exactly.
Yeah.
And staging encompasses a lot of things. I mean, it's general yard cleanup, it's washing windows. That's what staging is these days. It used to be that, a stager would come in and say, sellers, you need to move out.
Oh, yeah.
My furniture, you can't sit on it. And that's how it went. But now we've got, I've got all kinds of stagers, but several stagers that'll just work with their furniture,
Really? Okay.
twist it up, make things shine. Looks like a completely different house, and
Huh.
feng shui, placement, color, and there's so much. There's like science behind it.
So you're saving the couple from having to put stuff in storage, but of course their stuff has to look decent in order to work.
Yeah, well, pretty much. But they can pull stuff out and bring, swap
few
things. But staging absolutely, positively works no matter how it's done. Vacant houses, no, they don't show as well. Messy houses, no, they don't show as well.
Yeah, it's funny you think with a vacant house, you be able to show all that room, but the thing is people can't imagine their own furniture.
Right.
Yeah, because think about it when you go into a model home, right?
Yeah.
What you're buying is this whole beauty, and what you're not getting is that beauty. Like, people buy the staging emotionally. They emotionally buy the staging. Like, they see how they could be lounging in the backyard with the iced tea and the towel, and they see how that big, TV on the wall and the sectional couch and all that.
What you don't want is for someone to go in and go, how much for that furniture? You
Yeah.
gotta buy the whole house too.
Yeah.
Patty, you got all this good information, good insight. How do people get hold of you?
Oh, and I am so happy to share any information anytime. Patti Cohn, Cohn, and I'm with Pacific Union International, the luxury broker in the Bay Area. And I'm at 415-722-4842.
And your email?
Patti.Cohn, Cohn, at pacunion.com.
Could you use it
Is it
remember?
Patty, P-A-T-T?
Yes, thank
Very
you.
good, very good.
Or you could go to bestmarinagent.com.
Ooh.
There's a reason for that.
Yeah.
Because you're the best marine agent.
So paying for staging, Patty, are there different ways that someone who's selling their home can make arrangements with their stager for how that cost is paid up?
Pretty much up front.
Okay,
Yeah.
all right. Have you had, because I know in the East Bay, we've done some flip sales where we've been able to work out arrangements where it's 50% and then 50% at close. So I wasn't sure if that was also true in other higher end areas, because I know in Marin.
And if it saves you, a whole month's worth from a sale, it could be worth that extra.
Well, that's the whole
$70,000.
idea, right? The whole idea is you sell your home faster and for a higher price.
Exactly.
Right, you really do. And people wonder, what's the staging contract? It's basically a 2-month contract, and then you can keep it month to month at a lower price. Maybe it's sometimes $1,500 a month to keep it
Yeah, because the
staged.
price is already there, so you got that moving then.
Right.
Yeah,
And you're paying for the design and all that, yeah.
Very good. Mark, another email came in and says, I read on your website that Pacific Private Money has been in business since 2008, but your fund has been around since 2013. How did you make loans before 2013?
So that's a great question, and it's actually a really simple answer. We made loans using private individual capital that was not in a fund. So when you call a private money loan broker or loan originator, there's really only 3 ways that they can make you a loan, assuming that it's private money and not bank money. One is maybe they have their own cash, and some families actually do have small businesses where they love lending out their own money secured by real estate because of the great yields they get. It's a conservative way to make money on your money. The second way is to work with a group of individuals who like to invest in real estate secured notes. That's how I started in 2008. I came from a 20+ year career in real estate, so I knew a lot of real estate brokers and other real estate professionals who, because they were real estate savvy, many of them who had saved their money and had substantial savings were either buying real estate or lending on it. So I was able to slowly over time build up a database of people who like to invest in local real estate secured notes. And that's how we did, the first 500 loans that we did at Pacific Private Money were just basically, a handful, which has now grown up to about 300 individual investors who have invested in at least one loan directly through Pacific Private Money. Now in 2013, we decided to create a mortgage pool fund as an additional way to raise money and to deploy that money into loans. And the reason why brokers like myself are attracted to the fund model is it's easier to deploy the capital, number one, but also it saves from really making your investors angry. Because what was starting to happen in 2013 is we'd get a good loan, and because it was efficient, we'd send out the funding opportunity by email. We put together a nice overview on the loan funding opportunity. We'd shoot it out to 20 or 30 or 40 people, and then we'd get 5 or 6 phone calls within an hour, but only the first guy would get the loan, and the other 4 or 5 would make some snarky remark, if not downright angry at me wasting their time.
Don't send it to me.
So now that still happens, unfortunately, although we've gotten better at strategically deploying individual note investment opportunities. But the fund, I got to tell you, the fund is great for people who are passive investors who don't want to play that phone game by watching their email for any opportunity that comes in. People they're living their lives and they don't want to be that hands-on. So our passive investors, they invest in the fund. They get great reliable returns of nearly 8% for the last 4.5 years running. But if you're a note investor and you like investing in individual notes, you're not a fan of investing in funds, and people have different appetites for how they like to manage their capital, we still work with individual note investors. So for more information on mortgage investing in general, which includes direct note investments or investing in a mortgage pool fund, if you want to learn the safety and security features and how we compare and contrast with things like stocks and REITs, give us a call. We're happy to discuss that with you in great detail. We're at 415-883-2150 or go to pacificprivatemoney.com. We do monthly webinars, and lately we've been going around the Bay Area doing little road shows. We just did one at Momo's 2 weeks ago in Walnut Creek, and you'll hear about an upcoming event that we're going to do shortly.
Yeah, we'll announce it probably on the next show in March. Still lining up dates and locations.
And I think the best part about the fund is no losses. That's the important. To me, that's the most important thing. Preservation of principal.
Well, very consistent return. I think it's been eight, hovering around 8 for the last 5 years. So.
Yeah, so the fund distributed 7.85%, so just a little under 8 last year. That was a little bit better than the year before, where it was 7.8. And the years before that, it was around 8%. So it's been fairly steady, right around 8%. And more often than not, people go, "Gosh, it sounds too good to be true. What are the risks?" Well, you really have to call us and find out more information, because you'd be surprised at how well protected these investments are. So again, for more information, pacificprivatemoney.com.
All right, stay with us. We already asked our trivia questions. Don't touch that dial. We're going to be right back with some closing comments. Okay,
Perfect.
Small signatures, and then
Wrap that up shortly.
Can I have 5 minutes or whatever?
Yeah. It usually likes a minute to wrap up.
Yeah, so just nothing.
Well, we can.
Figure it out. Let's see if there's anything.
any last minute tidbits.
No announcements.
Stop. We can pitch private money loans one more time, since we haven't mentioned it yet.
Yeah, you say basically one thing is you can't invest if you're not an accredited investor.
Oh, yeah, let me say, right,
Yeah, back there.
let me expound on that, that's better.
Here we go. Welcome back to the Best in Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hahn, Patti Cohn, and Nam Phan. Mark, you want to make sure there's a clarification on something.
Right, I wanted to finish on talking about the Pacific Private Money Fund. Mortgage pool funds in California typically require you to qualify to invest, and the qualification regulations are that you be an accredited investor. So many of you know what that means. It means you need to have $1 million net worth, but not including the equity value in your home. So that is a qualification. It's an SEC regulation. It's not our requirement, but most mortgage pool funds do require you to be an accredited investor. In the Bay Area, that's not a difficult bar to cross in most cases. But let's just say you're not. And we do get calls from people who've got several $100,000 in addition to their stock holdings and other holdings that they want to put to work, and they want to make some return on it. And for whatever reason, maybe the bulk of their net worth is in their home, and that's not unusual in Marin County and San Francisco. You could be worth several $1 million and have the bulk of that tied up in the equity in your home, but you don't pass the accredited investor threshold requirement. What do? Well, you can still invest in individual notes. You do not need to be an accredited investor to invest in individual notes. And we have a new note sales platform that we've been talking about for several shows now, and that is the website called privatemoneyloans.com. That's privatemoneyloans, plural, all one word, .com. And if you go there and register, you can view individual notes for sale, and you can invest in an entire note, or you can invest in a piece of that note. We fractionalize notes up to 5 ways, sometimes 10 if it's a larger note. So sometimes minimum investments could be as low as $50,000 investing in a real estate secured note. And again, these are California loans. These are not the same loans that you might invest, let's say, if you went on a nationwide platform, because on those nationwide platforms, you don't actually get a recorded deed of trust. Here on our platform on privatemoneyloans.com, this is trust deed investing, just using new technology that allows you to shop at your leisure and not battle it out with guys over the email and over the phone. So for more information, you should go to privatemoneyloans.com, register. It costs nothing to register. We won't spam you, and take a look at the individual notes that we are selling. And these are actually notes that have already been closed. So some of them have been performing for a few months, some just a few weeks. So again, check us out, and we're really excited about that new note sales platform.
Very good. Patti, any last comments?
Well, I think it's really tricky to be a buyer or a seller right now. So I was going to suggest someone, if you have any questions on strategy, that's what I excel at.
Yeah, you do.
Call me, 415-722-4842, and it's Patti Cohn, COHN.
And you're very good about giving information, not requiring people sign a listing with you right away.
Right, a lot of people are afraid to call realtors because they think you're just going to glom onto me and annoy me and make me sell my home. But no, you're just looking for information, and that's a great service.
Patti is an anti-glom person.
No gloming. I understand it's a process.
Nom, anything before we cut out?
Yeah, if people are interested in attending our next fund information session, call me or email me. Phone number is 415-883-2150, or you can email me, NAM at pacificprivatemoney.com. Also, go to our website too. There's a lot of information about past fund events, as well as information about private money loans. It's a great resource for people who are interested in understanding private money better.
Yeah, a lot of websites are just really nothing more than a brochure or a business card for companies. We keep adding material where we're putting more and more. We've been doing videos, we're doing interviews, we've got webinars up there, there's articles and blogs. I've been writing blog posts. Edward has some information we're making available on there. So anyway, go to the resources tab on the pacificprivatemoney.com website and read and learn.
Okay. All right, guys, we're going to cut out here. Here's our thoughts for the day. Life is like a coin. You can spend it any way you wish, but you can only spend it once. And the difference between school and life, In school, you're taught a lesson and then given a test. In life, you're given a test that teaches you a lesson.
That's
awesome.
great.
Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
I-
Everyone bites the dust.
I know.